If you've been in the pharmaceutical or healthcare industry for any length of time, you probably have a sizable retirement portfolio by now. So while some risk is unavoidable if we're looking for growth, we can't completely rule risk out of the equation. We can't eliminate it completely, but we can do a lot to control it. For that dual mandate of both growing the asset within an acceptable level of risk, but also within your personal comfort zone. But how much risk is too much risk, I get asked. Well, as I tell people, you'll know when the ride gets too bumpy. I'm Mike Gibbons with Gibbons Financial Group, and today I'll be going through some strategies, risk management strategies for both mitigating and handling risk within your specific level of acceptance. And at first, it's important though that we understand some of the main risk factors affecting investors who in the pharmaceutical space have access to their own company's publicly traded stock. Overconcentration is a big one. So much of the time when I meet with a client from Abbott or AbbVie or any of the healthcare companies that are publicly traded, one of the first things we'll recognize is the overweighting in company stock. And I understand the why. It's the devil that you know versus the one that you don't. And many will say, well, it's all about the dividend. Well, if we can create a path to reduce the market-weighted risk within your portfolio and overexposure to the individual stock while increasing the dividend, wouldn't that be a prudent move? And of course, many would say yes, but how? So looking at your portfolio, if more than 10% of your portfolio is tied to your employer's stock, that's a huge red flag. If you're invested in any single stock, not just pharma or healthcare, it's highly likely your portfolio is subjected to specific stock and sector risk. So we must look at to pare that risk down, especially if you're in that window of 1 to 5 years before retirement. We've got to be able to determine your specific risk tolerance. How much risk are you comfortable taking? This is highly personal. And clients don't know what they don't know here. To ask them to define a level of risk individually, they don't know the answer. They don't understand asset allocation enough, and it's not their fault. It's just not their field of expertise. Your risk tolerance is partially determined by your personal preference, but by your age and proximity to retirement and longevity as well. Those all matter. So for instance, if you're a young professional with decades until you're going to retire, a higher risk investment strategy may pay off. Higher risk investments have a greater potential for rewards and also can weather the market over long periods of time. But we absolutely need to allow specific data and analytics to define your risk by virtue of your current portfolio. We've got to look at this through the lens of using some software, which we offer here at Gibbons Financial. In fact, we can consolidate down for those close to retirement within 6-month intervals of how much you stand to gain or lose within your portfolio. So this is really important for clients who are looking to understand that risk-reward trade-off. This is a non-negotiable point. You have to do it. I cannot underscore that point enough. It's very, very important that you understand risk, lest we end up like those individuals who retired in 06 and 07 who didn't see the financial crisis coming. Always a good idea to discuss with your portfolio, with your advisor, and how much risk that you have, but getting you to understand that is also vitally important. As I previously stated, this needs to be looked at through an analysis tool, which we can provide here at Gibbons Financial. Got to be looked at. This is the one part that's non-negotiable. It's got to be looked at analytically. If you look at your portfolio almost every day because you're worried about market fluctuation, that's a bad sign. You're probably not getting much sleep. Another is having your employer's stock again as your single largest asset within the portfolio. And if you want to retire within 5 years or fewer and still have 30 to 70% or more concentrated in any one stock or couple of stocks, that probably will jeopardize the health and safety of your portfolio. So it becomes that arithmetic of loss question. If I'm down 10% a year and I'm getting close to retirement, I've got to do 20% next year just to make that back up, meaning I need to take more risk. And that's not what we're trying to do. We're trying to repair that risk over time. Looking at markets, whether they're in growth mode or sell-off mode, am I deciding too quickly to pull the trigger on things that I probably shouldn't have? Am I overreacting? We want to take the emotion out of investing, and there's several strategies I usually like to suggest to clients who want to lower their overall risk portfolio. One is diversifying again beyond pharma and healthcare and look to get into other sectors. And there's a lot of other sectors that provide growth. Again, is reducing specific equity risk. The other one would be looking at making decisions inside of Roth and tax-deferred accounts where our cap gains are not existent, where we don't have to worry about capital gains. Then periodic rebalancing as part of the portfolio ongoing management is vitally important, which we handle here at Gibbons Financial. If you're not having any of this done for you, let's have a conversation. We've been in these wonderful markets months, but things cool off, as everybody knows. We need to strategically be aligned that if we're looking at retirement within a year or to 5 years, that we want proper allocation, and we can provide that here at Gibbons Financial. If you'd like to discuss your specific situation, truly understand what your specific portfolio risks are, give us a call, 224-419-5550. We're here in Gurnee, or email me at mike@gibbonsfinancialgroup.com. And be sure to join our free webinar, Retiring Early from Pharma. Thanks for watching, guys. We'll look forward to talking to you soon. Have a great day.